So I started up with the idea is, was it possible to create an investment that would return $1 million, and what was the shortest time frame that it could be achieved in?
At Real Vision, we're always looking for new alternative investment opportunities. And with fears of a stock market bubble, interest rates near zero, and most of the world's economies still feeling the effects of the COVID pandemic, it seems the one thing we can be certain of in 2021 is uncertainty. This uncertainty in the market means investors are chomping at the bit for alternative investment opportunities outside of the stock market. Most investors, when deciding which market to invest their money in, will focus on the potential for profit. They really focus on a specific profit amount. But we spoke to one investor who did things a little different. Kevin Halliley, an entrepreneur and investor based out of Perth, Australia, began his alternative investment search with a profit target and worked his way backwards from there.
So in late 2019, I started to take more interest in what was happening with the global economic situation, as well as the financial situation, and how it would impact my family and myself going forward. The idea of, could I create an investment that would return $1 million in a reasonable time frame came to mind. What traditional asset classes such as property, equity markets, cash in the bank appear to be very toppy, frothy, and therefore, for me, risky. Or in the case of cash in the bank, having near zero interest rate returns and likely negative returns in some markets, my personal investing experience with those traditional asset classes of property and equity markets also led me to avoid them in the current market. So the question is, what's left? My thoughts at that time was to invest in tangibles, which for me included precious metals, gold and silver, and productive land, and to minimize holding fiat currency.
After narrowing his options down to precious metals or productive land, Kevin finally decided on agriculture. The only issue being that agriculture in Australia and the Western world has high input costs, which could drastically affect the potential returns.
I've started an agribusiness venture in Thailand under Isaan Agribusiness Enterprises. I've traveled around the Southeast Asian region quite considerably, from China, Japan, Indonesia, Malaysia, Myanmar, and Thailand. Just looking at the conditions in Thailand, it became a natural choice. So I could not generate the projected returns in Australia or anything near those returns for one. Thailand's got good infrastructure, good roads, good facilities. The laws are clear, the court system works well. The entry cost in setting up such a venture is also much lower than in other neighbouring countries. In regional Thailand, where we operate, there is abundant existing cleared land available to utilise, to convert existing farms to agribusiness ventures, and to grow the business, and no shortage of labour or support to operate the business. My partner is also in Thailand. Her family and herself, they are farmers, third generation. It was a natural choice that we would engage in a farming venture.
Thailand is one of the major exporters for food produce into China. The good trading relationship between the two nations, coupled with their close proximity for cheap distribution, means Thailand is ideally placed for an agribusiness venture to flourish. With the location decided, Kevin then began to focus on the next step, the crop itself.
So we're building a durian farm. We were always going to go ahead with the agribusiness, and we chose durians as we knew that it was going to be a very lucrative crop in the next few years. Durian is recognised across Asia as the king of fruits. There are many positive benefits to growing durian as a long-term, high-value, high-yielding crop. The growth in demand for durian increases every year by double-digit percentages. And as much as durian production keeps increasing, it still cannot keep up with that demand. The biggest market for durian in Southeast Asia is China, and the majority of it comes from Thailand. There is a lot of available land for growing durian plantations. So we see it as a good opportunity to expand this farming venture into additional farms going forward.
While planning the next expansion stages for the project, Kevin realized there was a way in which Isaan could scale up at a much faster rate than initially planned.
The idea came to me that we were going to proceed with the farming venture anyway, but how do we scale this up? One of the options was to include investors. We can see very clearly that with additional capital, We could scale up and grow the agribusiness much faster than trying to do it on our own, one farm at a time. We would get our share of the return over a larger number of farms if we were successful with the participation of outside investors. That way, everyone wins.
After planning the investor proposal, Kevin realized that he could offer the investor the same profit target he began with in the first place, $1 million net return.
I started from the point of 10 years. You look at an investment cycle, say 10 years, what would that return? And it wasn't quite enough. The reason being is that the durian trees come into fruit in the third year. So the first 2 years, there's no real return. So therefore, extending that out to the point where the return was $1 million net for the investor, and it came in at 12 years. So the concept was based around releasing 15 lots of land in Farm 1. Each lot of land is 1,600 square metres in area. That will host 48 trees. The capital investment cost for that is $55,000 Australian. Projected returns over the 12-year term is around 180% per annum averaged over 12 years. The plan was always to scale it up with additional farms. We're on the lookout for the second farm now. We have one investor who took 10 lots in Farm 1, it's paid for, and he's reserved another 10 lots for Farm 2. So we are seriously on the lookout to start the second farm and to scale up the enterprise. Those returns may sound too good to be true, but that's what you get based on sales data and prices. We are using farm gate prices as a metric to calculate our returns. And we know there are significantly higher prices further along the supply chain towards the retail end of the market. In China, for example, for the best fruit, the price can go as high as $120 per kilogram, which is astronomical. We're not doing any of our projections based around those prices, but we are confident that by tapping those export markets, we can get far better prices. But the projection for the investment is based around farm gate prices averaging 180% per annum.
With all these positives, there is always the inevitable question that follows. If this is so good, then why aren't others doing it?
As a reference point, there is a large corporate entity doing similar durian farming in a neighbouring country, and the cost differential and returns offered are significantly different to ours. For example, by comparison, we're around 4 times lower as an entry point. With no additional annual charges to the investor, all operating costs are deducted from future sales of the crop, and our returns are circa 180% per annum, averaged over a 12-year lease term, compared to their approximately 20% annualised return. The business is registered under a Thai limited company. The land is leased to the limited company for a duration of 30 years, which is what secures the investment for the investors. One aspect of our plan to lower the risk in the venture for others is that we purchase and set up the farms with our own capital in the first instance. Then once secured and once the farm enterprise is in progress, we will then invite interested investors to participate. Proof of concept will always be demonstrated by proof of activity on the ground in the first instance. Another way is that we have reserves of trees also planted on the balance of the farm, which can supplement any loss of trees on the investor leased land. And we have also the flexibility to extend the investment term beyond the designated 12-year lease term if the growth in production is not performing to expectations. The leasing and management contract, there is a clause which does allow an investor to either on-sell his lots. We also do have a buyback clause. If the investor is not happy in the first 3 years, we'll happily take the investment back off them at a cost of their capital minus any costs incurred.
Proof of work, reserve trees, extendable contracts, and buyback clauses help to give an investor some peace of mind. For Kevin and his family's peace of mind, they wanted to make sure that Isaan Agribusiness was not only successful, but also had a strong focus on ESG.
So in terms of ESG, environmental, it's good to be growing a tree. We are setting them up as organic and as energy efficient as possible. So this will include the use of solar and battery storage for water pumping and irrigation. I hope to add floating solar on the dam. This will increase the solar footprint without using up valuable free land, which will also reduce water evaporation off the storage dam. Food security is going to be very important going forward, especially in the markets that we are targeting. So the use of QR coding to demonstrate the full traceability of the supply chain from tree to the market point of sale will also be used, which often results in a pricing premium as well.
QR coding and distributive ledger technology will allow all parts of the supply chain to track the durian fruit. And for investors who want to keep a closer eye on their investment, Kevin and his family are offering a great opportunity to visit the farm in person.
I think it's important investors have the opportunity to see where their investment is going. Every investor will be able to come and visit the farm and stay in the self-contained cottage that we are currently building. What we will be doing with the farms is incorporating remote monitoring using cameras, both for security, but also we ultimately will get that up on the website so you can monitor in real time.
Kevin's story is an intriguing one. His alternative method of investment analysis, by starting with a return target of $1 million, forced him to look past the usual alternative investment options. Agriculture would likely not even cross the mind of your average investor, but through the process of elimination and an open mind, Kevin was able to see the great potential the agricultural industry has to offer. Despite Isaan Agribusiness starting out purely as an investment, it's clear that to Kevin and his family, it has morphed into something much more personal. If you're interested in learning more about Kevin's project, you can find his details in the descriptor below.